Good morning. It's Monday, March 10th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Hope you all had a great weekend here. Let's get you ready for the trading day. Let's turn our attention here to what's moving these markets. And it's really, we're going to turn our attention back to inflation this week. So Tuesday, we've got the JOLTS job opening data. Wednesday, we've got core CPI month over month and then core CPI year over year. Thursday, we'll have the core PPI month over month and unemployment claims. Friday, we're going to see University of Michigan consumer sentiment and then also those inflation expectations as well, which have been holding just a touch higher. So overnight, you do have weakness in the U.S. equity markets. You also have some of the metals markets coming off here just a touch from their highest levels. When I started looking at some of this data here last night, we were up at our higher levels. Now we're kind of slipping back here just a bit. Energy futures just a touch higher. Wild ride last night in the natural gas market. Also in the cryptocurrencies with Bitcoin back down near 80,000 as of this recording here. It is lifting off of those lows. You got Ethereum futures drop below that 2,000 mark for just a touch. The dollar just a slight bit weaker. Foreign currencies just a touch higher. A mixed reaction in the grain markets here with corn essentially unchanged. Beans down 4 and wheat up 6. So that's kind of your overview of the markets here. So it's the Trump transition talks that really sparked these fears in the markets here. He said that we were in a period of transition and that the U.S. economy had added to the concerns about a potential slowdown here. It caused the treasuries to rally. It caused the 10-year note to come off as far as yields. So Trump's remarks, that comes following last week, which was an extremely volatile week here. And he said that the administration is willing to tolerate short-term pain for long-term gain. So that really soured that investors' sentiment. Now, looking at the precious metals, we do see gold. It is essentially unchanged here at the moment here, down $2, but it was a bit better here, up about 10.15 in the overnight session here. So your overnight high, 29.2640. Your overnight low, 29.0290. We're trading at 29.11 last. You look at the silver market up 14 cents at 32.95. High was 33.15, low was 32.78. So some key levels that I'm looking at here on the gold market. The pivot point 29.19, and the pivot on silver is 32.89. The gold silver ratio is sitting at about 88 to 1 right now. So gold futures really slipping in relation to that silver market. Couple things to note here as far as critical levels, and you really got to watch this, is that you look at the last 5 sessions in the gold market, been quite a tight trading range in that market, and also has not had the ability to close over about 29.35 or so in that range, 30 to 35. It gets up there and it just leaves that wick right there. So investors are buying the dip, but how long will they maintain that mentality is the question here without a sustained breakout to the upside. Because if we start to sell off from here and we trade below 2900, 28.55, you're going to see that market really start to sell off here again, and we will signal a lower high on the chart. So a little bit of concern here if we don't get that close over that 29.35 area. Now the ETF flows from the previous trading session, they are buying the dip. We saw funds, they added about 34,000 ounces of gold to their holdings, and it's the third straight day of growth. And that's why you're seeing these wicks where we sell off and we come back up and we close near the high of the session, but again, not breaking out to the upside. Now we saw ETFs, they cut about 1.5 million ounces of silver holdings here in their last trading session. So that was Friday's trading session. So if you look at last week's weekly flows here, the ETFs, they increased their gold holdings by about 577,000 ounces. You saw ETFs reduce their silver holdings by about 3.91 million ounces. You also saw platinum being reduced by about 4,500 ounces and also palladium by about 13,000 ounces. So those are a couple things that I'm keeping an eye on. Now the silver market, it's really got to get over 33.40, which has been about the recent high here, 33.40 to 48 here in the last week or so. We need to close above that 33.40 level. Now a big air pocket of support doesn't really come down until the 50-day moving average, which is going to be right around $32. So, you know, you've got kind of a big area where markets could slip. So we want to be really tight on our stops and also look at some protective plays here as far as in these metals markets. And when you get this tight trading range around an area where there could be a big breakdown, but you also need that breakout move to the upside, a lot of people are going to get stopped out quite a bit. So it's going to take several times before we get that direction right on a breakout. And I think we'll see either a breakout or a breakdown this week with all the inflation data coming out. Now, one of the markets that has been weaker and under some weakness most of the session has been the copper market. It's because of the fact that we saw weak economic data out of China. Their Chinese consumer inflation had fell more than expected. And I think that also put that sour note in the equity market. So the S&P 500 down 66 at 57.10. Low of the session was 57.03. You look at the NASDAQ down 250 points, just trading back below 20,000. The Dow's down 400 and the Russell 2000 at 2050 down about 22 points here. So it's really the concerns about the health of the U.S. economy here, and investors are really going for safe haven assets, and they're specifically targeting those treasury yields here, trying to lock in these higher yields as the market starts to weaken. So you're seeing this inflation holding up, so the Fed's unable to cut rates, so they're trying to lock in these yields while they still can and while they're high. So if you look at the 10-year, it's up 16 points and the yields are at 4.25. You look at the 30-year, 30 years up a handle to at 117.20. Now, if you look at indices here and you start to think, hey, is this like the crash? Is it over and everything else like this? Indices are down about 10-12% since hitting our all-time highs about 2 weeks ago. Now, if you look at last year, we saw 3 declines that were over 10%, and every one of those was a strong buying opportunity here. So is there a question for concerns? I think that this is more just a healthy pullback here, and you've got Trump kind of rattling some of these markets just a bit. So for a confirmation of a bottom, we really need to see the S&P 500 hold that 5660 level. Then you need to see daily closes over 5700, and then we need to fill the gap and then move back up to about 5850, and I think we'll start cycling back up to that 6000 and 6150 mark. So we just got to be a little bit patient here, let the data take care of itself, really implement risk management, things like that. You guys got any questions on futures or option trading? Give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.